Hi, this is Stephen from Share Navigator. Today, I just want to show you briefly our market beating portfolios that you can look at, you can copy. So let's get straight to it. We're going to log into the members area of the website. And when we get into the members area of the website, you'll see in the dashboard on the left hand side here, there's a number of different choices with our courses, etc. But we're going to click on portfolios. And the very first portfolio that opens up is our US Mega Cap High Dividend Yield portfolio. But we'll just focus here on the left hand side for the moment. You can see that there's four different types of portfolios. And really these portfolios suit different types of investors. So the US Mega Cap High Dividend portfolio, that's really for conservative investors who would be low on the risk curve. Large cap value stocks are low to medium risk. The growth portfolio would be considered high risk. And our Eurozone large cap value portfolio, it's pretty similar to the US large cap value one. The only difference is it's all European equities in this one. So we're going to talk you through what the portfolio page looks like. So we just focus in on one, and then you'll be able to go through each and every different portfolio that we have. So the first thing here, it's just telling you what type of portfolio it is. And then it's telling you what type of investor it suits. So we're telling you here, this is for a conservative investor, doesn't really care about price fluctuations in the short term, has more than a 7-year price horizon. The portfolio performance, we're constantly keeping you updated as to how this portfolio has performed. We built this in June 2010 and today it's up 104%. So it's done really well for us. We have a little chart here as well. The blue line represents the high dividend yield portfolio, and the black line is actually representing the returns in the S&P 500. So it's important when you're looking at performance that you benchmark one performance against another, and usually the stock market index is the one to benchmark against. So we're beating the stock market index, which is very impressive. Portfolio risk. This is measured in a thing called beta. Don't worry about this for now, but all you need to know for now is that portfolio beta of below 1 means that this portfolio is less risky than that of the market itself. And that's why it's when we're talking about the conservative investor, these are the type of portfolios you want to invest in. Some of our riskier portfolios have beta above 1. Then we get into the stocks in the portfolio. So as you can see, you can come here anytime, see what stocks we have in this portfolio. You can copy them if you wish. So for example, Pfizer is our best performing stock. We bought it on the 8th of June. We bought it at 40.52. We've been paid $4.04 so far in dividend payments. And the current share price at the time of me doing this video was $31.15. And overall, that's given us a profit of 142%. So you can see we've 10 stocks in this particular portfolio: Verizon, DuPont, Chevron, Merck. And right down at the end, we've got Kraft. Kraft was in this portfolio. It's now gone because the company split in two. And when we sold that back in 2012, I think it was, up for, it was up 58% at the time. And then at the bottom here, it's just a kind of a description as to, you know, what we're looking for in this type of a portfolio. What are the key ingredients, I suppose, and then how we go about maintaining this type of a portfolio. So that's our high dividend yield portfolio. To contrast that, let's say, for example, to our more aggressive portfolio, it's our growth one. Again, we've the same heading types, everything is the same. This has performed really well versus the benchmark index. It's beating the pants off it. And that's the nature of the portfolio. We're in a bull market at the moment, so it's going to do really well in that. And you can see that by the portfolio risk profile in this particular one. The beta of this portfolio is well above 1. So in this one, because we're turning over lots of stocks in it, you can see this is our current portfolio. We've about 24. The reason we've put so many stocks into this is because of the nature of the stocks in it. They are riskier companies. And the best thing for you to do when you're investing in riskier companies is to have a lot more of them in your portfolio. So we'd be saying to you, don't put any more than 2.5%, 3% into any one of these companies. So at the moment, you can see here the company called Kaki. They're in IT consulting. We bought that on the 8th of February 2013. It's up 61% at the bottom at the moment. If we actually come down here to stocks we've actually sold out of this portfolio, you'll get an idea of some of the returns that you're getting. Questcore, for example, we bought on the 8th of Feb. We sold that about a year later for a 258% profit. USANA Health was another one. up 178%. Green Mountain Coffee, we made 163%. So these are the type of returns we look for in these type of companies. Do we get them in all of them? Absolutely not. So this is an example again of some of the portfolios we have. We go into the large cap value portfolio for Europe, and you can see these are just all European equities. And again, they've done quite well. You look at the likes of AXA, Allianz up 68-55%. So these type of companies have done particularly well for us over the last number of months. So if you want to get some ideas for your own portfolio, after you've done your investor profile analysis, you can just simply click on portfolios, look for ideas here. My name is Stephen Cox, this is Share Navigator. Please contact us via our website, sharenavigator.ie, if you're looking for more information. Thanks and bye for now.